Guys, I just don't see how you can have price targets like this. Craig, you have an $85 price target. When did you put that 85 on there? Did you? It was in 2000. What? When did you put it on there?
It's been on for like a year and a half, 2 years right now. I don't remember exactly when I put it on.
Your privates are in a vice, man. Craig, aren't they? I mean, aren't you howling in pain, huh?
Heck no, man. Heck no, right?
Nothing about what you're saying makes sense, Craig. And I mean...
Well, grab your popcorn, ladies and gentlemen. This is going to be good. The Wall Street analyst whose opinion on Tesla is egregiously overvalued, in fact entirely worthless, has finally been called out and absolutely roasted live on air on none other than CNBC. And Tesla stock has an extremely quiet and boring day, up a mere 6.9%, after producing and delivering more vehicles than Wall Street was expecting. Which, by the way, will be the theme of the rest of this decade. You can count on it. So first things first, if you'd like more content, check the links in the pinned comment to join Patreon and to subscribe over on Twitter. Plenty of exclusive video content already available and loads more dropping soon. Second things second, Tesla stock today up 6.9%. More proof that we definitely live in a simulation. Just to put this in context, year to date, Tesla stock now up close to 160%. On Tuesday, the 3rd of January this year, Tesla stock closed at $108.10 per share. Currently $279.82 per share. It's been a very volatile 12 months though. One thing is guaranteed, there is rarely a dull moment when it comes to Tesla and Tesla stock. It's been a bumpy ride over the last 5 years as well. And in case you're new around here, I started this YouTube channel back in November 2019, published the first video on the 19th of November, when Tesla stock was a mere $22.20 per share. It's been quite a ride since. That said, Tesla stock's still down over 30% from its all-time high closing price back in November 2021. Only a matter of time.
More on the run so far this year. Craig Irwin, Roth Capital Senior Research Analyst, and Ray Wong, Constellation Research Principal Analyst. Guys, I just don't see how you can have price targets like this. It just, I guess it's a commentary on the stock and how people feel about Tesla and Elon Musk. I thought I checked the numbers to see if they were right. Ray, you have a buy on Tesla with a $320 price target. Craig, you have an $85 price target. I mean, you guys are looking at this. You're looking at the same thing. Craig, you had a hold too. When did you put that 85 on there? Did you? It was in 2000. When did you put it on?
It's been on for like a year and a half, 2 years right now. I don't remember exactly when I put it on.
Well, this interaction is shaping up to be one of the best of all time on CNBC. Joe's going after Craig and his ridiculous Tesla price target, his absurd statements. I can just feel it right now. So let's ask a question. Craig doesn't know exactly how long he's had this absurd $85 price target on Tesla stock, but he said maybe 18 to 24 months. Let me ask a question. Let's just assume that he's had this price target for give or take 2 years. What has Tesla done in the intervening 24 months since Craig first said, hey, Tesla stock's worth $85 per share, but I'm a gigantic fucking pussy, so please don't act on my price target, because even though I think it's worth $85 per share, I don't want anybody to buy or sell based on that, because I don't actually think that it's ever going to get to that, because I'm a gigantic vagina. The question again, has anything meaningful or material changed regarding Tesla in the last 24 months? Remember, in Wall Street land, a price target is an expectation of what a stock's fair valuation is over the next 12 months. Given the fact that Tesla deliveries have approximately doubled in that span of time, their revenue has approximately doubled in that span of time, their profits have, you get it right, I could keep going. It seems a little strange that your price target will remain unchanged at $85 per share, already absurdly low, over a 2-year period when the company itself has approximately doubled every number that matters. If I didn't know any better, if I were a little bit suspicious and cynical, I might suggest that Craig Irwin doesn't actually believe in his price target. Remember, this is the same guy that said to investors not to act on his price target. If I were a more suspicious person, I might ask myself, does Craig have an incentive? Perhaps a financial incentive? Perhaps a puppet master pulling his strings? Because again, I have to wonder, why would an intelligent Wall Street stock analyst have a price target on a stock that remains utterly unchanged for about 2 years when the company that price target is assigned to has approximately doubled all the numbers that are relevant to their financial results, aka their fair valuation? it's a little suspicious. Of course, it's pure speculation. It's not like there's any evidence that Craig Irwin says things that don't make sense, that are counter to reality, and therefore there's got to be an ulterior motivation. It's not like he's ever said that Tesla doesn't have anything that Toyota doesn't already have. Oh wait, no, he actually does say that every second time he's in the finance media. We know this is untrue. Toyota themselves have admitted this. They've torn down a Model Y and called it a work of art. Of course, I'm not a skeptical person, so I'm sure Craig really does believe what he says and really does actually think Tesla's fair valuation is $85 per share, and I'm sure he has a really good reason why it hasn't changed over the last 2 years, despite the company itself doubling.
Your privates are in a vice, man, Craig, aren't they? I mean, aren't you howling in pain, huh?
Heck no, man. Heck no, right?
Damn, Joe is absolutely on fire. Now, as far as Craig Irwin having his nuts in advice, there's just one problem with that, Joe. In order to have your balls in a vice, you need to have a pair of balls, and Craig clearly does not. Again, I refer to his prior statements where he's advised investors, I think Tesla's fair valuation is $85 per share, but I have so little confidence in this that I discourage investors from selling or shorting the stock based on this because I don't think I'm really right. He's literally said words to this effect repeatedly in the past. I tell you what, man, I hope you got your popcorn. This is shaping up to be an absolute classic.
The point today is price cuts work, right? There's demand for EVs out there. EVs are something compelling to a tranche of consumers. EVs are inevitable, right? That is the punchline today. But when you step back and you say this 6% move is a $50 billion increase to the market cap, and you look at the market cap of Ford today at just $60 billion, that puts it very clearly in context.
There we have it, folks. Remember, Tesla is just a car company. Therefore, a comparison to Ford makes total sense. Ignore the statements from Ford's own CEO praising Tesla, praising Elon Musk, praising Tesla's cost advantage, their engineering, their scale, their capabilities, their software abilities, their vertical integration. Ignore that. Tesla's just a car company. Therefore, it makes a lot of sense to compare their valuation to other just a car companies. And from a valuation point of view, as we know, the stock market doesn't at all care about growth. Therefore, we can ignore the fact that Tesla's approximately doubling as a company in terms of revenue, sales, production, whatever metric you want to choose, every 24 months. Whereas the company he just compared them to remains flat. Because remember, the stock market doesn't care about growth or profits or anything.
Tesla has more than 100 other competing EV models coming to market to compete against their four mainline units. You know, many of those are going to be wildly successful. The same pressure we saw in the back end of last year that brought this thing basically down to 100 is going to build into the end of this year when those models actually launch, and it's going to intensify next year. So the valuation, it's absurd. It's egregiously overvalued. But I get it. It's a consensus long. It's a company that's executing. That's why I don't have a sell rating. I have a neutral rating because I got a lot of levers to throw.
Well,
right?
that's bizarre. Craig, you got an $85 price target. How can you have it's a 277. That should be a sell rate. Nothing about what you're saying makes sense, Craig. And I mean,
Craig Dingbat Irwin is getting the roasting he deserves. Joe ain't holding back. He's right. Nothing Craig says makes sense. How can he not have a sell rating when he's got an $85 price target and the stock's about $200 above what he thinks it's actually fairly valued at? Answer, he's either a pussy, spoiler alert, that's true, and or he doesn't believe what he's saying. Which, of course, why would anyone ever say things they don't believe about a stock in the media? That would never happen. If something like that were happening, if somebody was appearing in the mainstream finance media and claiming that they thought a stock was worth $85, but unlike other analysts, not making a recommendation based on that, the only other possible explanation is if very large bags of cash were being handed to this person to say things that don't make sense. But that would never happen because Craig's a very honourable guy with a lot of integrity. He really believes what he's saying, and everything he says totally makes sense.
I understand it could happen, but you got to acknowledge that if you were a customer of Roth or a client of Roth and they were following your advice and they watched it go from wherever it is back to where it is now, they'd be saying, you know, that's putting a lot of faith in you being right eventually, Craig, right?
That's not what the institutional investors are saying. That's not what the CIOs of the world are saying. Around 70% of the CIOs out there say there's no way they would buy something like Tesla. You know, the guys that are long Tesla are momentum players, right? They behave a lot like retail in the way they trade things, but they move much faster and have much higher quality information. And many of them don't fundamentally disagree with me at all about the issue back end of the year.
Ray, you disagree, Ray, with
I think, look, this is a market cap raid. right? There's massive automation, fully integrated supply chain, optimization of government subsidies. There's no other car company that can beat them at this game right now in terms of scale, other than BYD in terms of in China. And so they're taking market share and market cap from all the other players. And so the goal is to get as many vehicles on the road as you can to get their AI out there, get their mapping out there, and ultimately get to self-driving. The end game is not to be just an EV maker. It's multiple business lines that people are betting on, from insurance to self-driving to energy generation and distribution. So cars are just part one. And if I was Craig and I'm looking just at the car side, I'd agree with him. But all the other things on the other end of that raid makes a big difference. And with a $9,500 profit margin to play with versus GM at $2,100 versus Hyundai at $1,000 or Ford at negative $760 per vehicle, they're taking market share and they're taking market cap.
Well, rest in peace, Craig Irwin. You know you've hit rock bottom and your entire career is over as an analyst when you are being roasted on CNBS for your idiotic comments about Tesla, being called out for making no sense whatsoever.
David, I want to show you where Tesla is in terms of hitting its annual target, the guidance that they put out earlier this year to deliver 1.8 million vehicles after exceeding expectations for the second quarter, delivering 466,000 versus the estimate of 445,000. They're now basically halfway towards 1.8 million. And almost everybody agrees, unless something dramatically changes, they will hit that target because they're expected to increase production and increase deliveries in the second half of this year. So what are the takeaways from the Q2 delivery results? First of all, how much have price cuts hurt margins? There's no doubt that price cuts did stoke sales in the second quarter, especially in China, but at what cost? JP Morgan out today saying, look, we're still going to raise our Q2 estimates, not by a lot, but they are raising them. And then the question is also, is the share price growth limited? By that, we mean take a look at what the stock has done year to date. It's up more than 100%. At the same time, earnings estimates have come down since the beginning of the year. So you've got a stock that is appreciated at an incredible pace while the earnings estimates have come down, and it has more than a few people saying, even with this pop today of 7%, this stock is unlikely to go much higher.
Surely, we all know the stock could do literally anything, so predicting a short-term movement, futile. However, if we think in terms of probabilities, given the fact that Tesla continues to hit it out of the park, exceed expectations, embarrass the so-called competition, and still today remains on track to hit 20 million units produced per year at the end of this decade, and the fact that the stock's all-time high closing price was in excess of $400 per share, and we're not even at $300 per share today as I record this, almost 2 years later, I don't think that reasoning, well, year to date the stock's up a lot, therefore it can't go up anymore, makes a whole lot of sense. Especially given the fact that we'll start in a year down about 70+% from all-time highs. Again, it's impossible to know what the stock will do. It's impossible to predict. But if I were a betting man, and spoiler alert, I'm betting a large portion of my net worth on Tesla stock, I would suspect over the longer term, the trend will be up, very up, but bumpy along the way. Also, something robotaxis, just saying.
Phil, I'm curious what the competitive map looks like at this stage, because you've got record numbers from Tesla, BYD, Rivian. You know, are any of them taking share from the other, or at this point is it just the tide is lifting with all the boats?
Depends on where you look at it, Leslie. If you're looking at it on a global scale, it's a case where they're not necessarily taking it from each other, but they're increasing their sales at the expense of everyone else. And BYD, by the way, was nipping at the heels of Tesla in terms of global EV sales. It may, in fact, overtake Tesla because of the strength of what it's seen in China. If you're looking at the U.S. market right now, about 64% of the EVs that are sold are Tesla models. And the expectation is that that market share is going to drop as you see more models come out from GM, from Ford, Stellantis through GM or through Jeep and through Ram are going to be ramping up their EV production. But we're not seeing that yet. And that's part of the bull argument out there, which is, okay, where's everybody else? The party has started. There's demand there. And yet you really only see the growth. And you're also seeing it from Rivian here, but you really see it from Tesla.
Nice to hear the finance media almost starting to understand that the entire global electric vehicle market is growing at a staggering rate. The demand is there. The limiting factor, how many compelling, reasonably priced electric vehicles are available for sale? On this front, Tesla is clearly, wait for it, leading the charge. But actually, please refer to yesterday's video. for some charts.
George, good to have you here. You heard Phil, but you kind of break down the delivery numbers. We got whatever you want to call it, a 10 or 15 or 20,000 unit beat relative to forecast. And we got 50 billion in market cap added this morning, and the stock is almost at your target of 293. So how should we be thinking about the what's already implied in Tesla's market value, and where do you think it can go?
Look, Tesla for us is an incredibly powerful long-term story. As we've talked about over the last 6 months, they did something that was pretty smart, in our opinion. They cut prices to stoke unit demand in the hopes of, over time, increasing the penetration of their FSD software. Right now, that FSD software costs $15,000, and we estimate that globally it has about high single-digit penetration rate. Over time, we expect that to get a lot higher, and we're in print saying that we think that the company should probably lower that price from $15,000 to probably something like $10,000. And so when you think about what that does to the margin profile of the firm over a long-term period, it's huge, right? Right now, as Phil alluded to, the company broke its promise, and its margins, its auto gross margins were below 20%. They were 18%. Now those margin expectations are subdued for the rest of the year. We think there are some tailwinds even in the near term because those price cuts kind of stopped over the last couple of months. But over a long-term period, if they could increase that penetration rate of FSD software, which is real-world AI, the margins of the firm should go a lot higher over the next 3 to 5 to 10 years.
Isn't it nice to hear the analysts starting to change their tune? We hear George there referencing the long term. Just spoke about a 5 to 10 year horizon. He just pointed out short-term margins might be a little bit flat, a little bit lower than expected over the next few quarters, but long-term, FSD is going to print so much fucking money, it's absurd. He's right. He also mentioned real-world AI. This may be one of the very first times we've heard a Wall Street analyst mention AI and Tesla. Better late than never.
But the fact that when it comes to Tesla, the AI component of the story is full self-driving. It is autonomous vehicles. It is something that we've known about and has been in the market for a really long time. Why should we all of a sudden be applying that much more value to it in the last 8 months when everybody's been consumed with excitement about large language models?
It's a great question. We've known about it, and we seem to be getting a lot closer to this actually hitting the penetration rate that will stoke demand even further. But importantly, I think the stock got to $100, not because people were concerned about AI, but they were concerned about vehicle demand, right? So right now what we've seen is expectations came down quite a bit in the winter of last year. Since that time, Tesla cut prices. It's worked. They've gained unit share. They've got their footing back. And what we've seen is the pendulum swing way too far into the negative camp. And right now, not only has demand stabilized, right? Margins could get better over the next 1-2 quarters. And like we just talked about over the long term, we have the Cybertruck being released at the end of this year in small volumes. And if you look out a few years, there's a lot of earnings power here. A lot of the stocks that we talk about in our group don't really have earnings power. We cover sustainability. These are very young companies, but Tesla, who we term the sustainability behemoth, has real earnings. And if you compare it to that group of stocks that we call the MAN group, the 6 large cap tech companies, it's incredibly attractive for the growth. And it always has been. I mean, when we initiated on the stock last year here at Canaccord, the discount was even more. And today it's narrowed a little bit, but the stock has underperformed the MAN group on a 1 to 2 year basis, and we think that has a lot more room to run.
You've mentioned, George, the margins several times, and obviously they did sort of underperform even their own target. At what point, though, does that become a concern if they don't begin to improve it? I know when you're looking at growth, sometimes margins can be overlooked, but at some point, you have to want to see that build.
It strikes me that no one in the mainstream finance media wants to inquire at all about autonomy. What are the implications if Tesla is successful with this real-world AI that you just mentioned? Please, let's instead talk about extremely short-term gross automotive margins again. Way to miss out on understanding a $10 trillion opportunity.
I think you have a really good point. So far, so good on Tesla's strategy of cutting prices and improving unit volume. But the razor blade model that we've talked about, selling units and eventually selling the software, we don't know yet. I mean, if it doesn't take off, this AI software, if the FSD software over the next, call it 2-3 years, and they don't get that margin boost, then it wouldn't have been as successful. We think it will. We think it adds a lot of value to consumers and to the world in terms of sustainability. But the jury's still out. We have to see if it happens. We're making the bet that the company has an incredibly powerful software suite, and that penetration rates will go a lot higher over time.
Garrett Nelson is VP and Senior Equity Analyst at CFRA. He has a buy rating on Tesla. Just raised his price target to $310 a share from $300 this morning. Garrett, great to have you on. Just looking at that price target, that would imply 12% upside from here. How'd you get to that number?
Uh-oh. An analyst who's just increased his Tesla stock price target by 3.33%, has just been challenged perhaps, to explain exactly what in his valuation model has changed to result in this whopping 3.3% price target increase, which obviously is because of a change in the valuation model and not a need to be in the media with a price target increase just to get the name for the firm out there. I'm looking forward to hearing what has changed in his valuation model. And shout out to Morgan for actually asking the question.
Sure. Thanks for having me. We came into the year very bullish on Tesla. We named it our top pick. We thought it would have a impressive bounce back after disappointing performance last year. And that has really played out. We took our rating from strong buy to buy a few weeks ago, just on valuation. Obviously, the stock price has more than doubled year to date. We do see some upside still from here, but we think the lion's share of the move has happened so far this year. So the basis of our price target is 42.5 times our 2025 EPS estimate, which gets to a price target of $310.
Okay, so apparently there were some very small adjustments to their 2025 EPS estimate for Tesla, and that results in the 3.33% price target increase today. Given the fact that there hasn't been a new earnings report, I'm guessing the changes they made were increasing the production and delivery estimates. That's all that's changed that we've got to go on, right?
So can we say that these so-called price wars that Tesla has initiated both here in the U.S. and abroad, where, for example, China, you're seeing very fierce competitive landscape emerge there as well. Can we say that they are successful so far?
It certainly appears that way. They've been successful. The series of price cuts that they've announced so far this year appear to have stimulated demand, as you mentioned. Was a record high in terms of quarterly production and deliveries. The deliveries actually exceeded the prior record high for a quarter, which was Q1, by 10%. And so it appears that they've been very effective. We do see some positive things here for the story, but in our view, a lot of the positive news is really priced in at current price levels. They're in the process of continuing to ramp their Austin and Berlin factories. They'll be achieving first deliveries of the Cybertruck by the end of the year. They're in the process of breaking ground on a new factory near Monterrey, Mexico. And then we think they're going to introduce a new model next year, which will be a lower price coupe. And so those are the catalysts that we see.
Garrett definitely has a point. Over the medium term, there are a ton of catalysts for Tesla. So to recap, Tesla stock up 6.9%. You really can't make this up after blowing away Wall Street expectations for production and deliveries. The Wall Street analyst covering Tesla with the smallest testicles, I'm just kidding, he doesn't even have a pair, has finally been called out for his hypocrisy and idiotic comments around Tesla and its valuation. Hey Craig, doesn't make sense. What you're saying doesn't make sense. How can you think the stock's worth $85 a share and not have a sell rating when it's almost $300 a share as we record this? Full credit to Joe for finally calling out this clown. I would like to send my condolences to Craig's friends and family. Rest in peace, Craig Irwin. And the narrative among Wall Street analysts is finally starting to change. We're now hearing Tesla and real-world AI uttered in the same sentence. In addition, we're also starting to hear some analysts pointing out that the short-term gross automotive margins aren't particularly relevant over the longer term when Tesla awakens its fleet of robotaxis. Everyone's going to forget whether the margins were 17%, 20%, 35%, because they'll be utterly dwarfed by the insane amount of money Tesla prints through their software business, driven primarily by autonomy, which is why I still believe Tesla stock, as far as I'm aware, is the best risk-adjusted opportunity in the stock market. And I want to be clear, there's probably much better opportunities out there. I just don't know about them. Athletic Greens AG1 has given me a massive, meaningful boost in energy, allowing me to do a lot more every day, including using my brain more and using my body more. I highly recommend you guys and girls check it out. Athletic Greens AG1 is an excellent way to fill in nutritional gaps. It's got 75 high-quality vitamins, minerals, and whole food source nutrients, plus prebiotics and probiotics and digestive enzymes and adaptogens to help you deal with stress. Plus, if you click the link in the pinned comment or head to drinkag1.com/SMR, you can get yourself a 1-year free supply of vitamin D3 and K2. But don't take my word for it. Here's what some of you guys and girls have to say. AG1 has changed my life. I was, as you described, treating myself like a circus, ate like trash, rarely exercised, used alcohol as a stress crutch, cannabis also. AG1 is what gave me the kick in the ass, got me back to the gym, motivated me to do more for myself, family, my business, etc. Keep doing what you do. Now, I know there's some skeptics, the same kind of people who think Elon Musk is a fraud, reading this going, what do you thought? There's no way that's possible, bro. It must be a placebo effect. Believe it or not, this is a recurring theme. If you give your body everything it needs to feel and perform its best, including having a lot more energy, you'll need ways to use that energy. For me personally, that includes more exercise, moving my body more social activity, and more cognitively demanding tasks, including producing a ton of exclusive content over on Twitter and on Patreon, plus my daily YouTube uploads. The proof's in the pudding. On to another testimonial from a viewer of this channel. SMR, you asked me to provide feedback on AG1. Here it is. It has helped with mental acuity, stamina, and intestinal waste management. Can't read between the lines. It certainly helps with regularity and digestion. That's what the digestive enzymes are for. It has also dramatically reduced my cravings for sugar. You guys need to stop eating sugar. It's fucking poison. I'm 50, 5'9", and overweight, aka a fat motherfucker. I think that's a technical term for overweight, isn't it? Is it fat motherfucker or obese? I can't remember. I average 100 hours a week in the West Texas oil fields as a safety supervisor. Jesus Christ, dude. No wonder you're struggling to keep your weight under control. 100 hours a week. Brutal. It has helped me lose weight. It is not an appetite suppressant. It can help fat people suppress cravings, and motivation to be healthier is critical for changing your diet. Love you, brother. Again, this is a great point. It's something people really don't seem to grasp. If you have more energy, everything becomes easier. It's like turning on easy mode for life. A few years ago, before I was taking AG1, my health was trash. I was struggling to get through the day, had afternoon fatigue. The last thing I wanted to do was either use my brain or move my body. Didn't have the energy. Now, my biggest struggle every day is figuring out ways to use that energy. I'm exercising way more, doing a lot more with my friends and family, and of course, my work output has increased substantially. And you can fact check me. Check out the average length of my videos I was posting to YouTube 3 years ago. Need I say more? And one final testimonial. Love this one. Okay, here's the deal for me with this AG1 shit. I'm 41 years old and not the type to eat, drink, smoke, or sleep healthy, so I was skeptical. That being said, here's what I experienced. Day 1, meh. Day 2, afternoon fatigue was about 45 minutes late. Day 3, 0 afternoon fatigue. Day 4, 0 afternoon fatigue plus extra energy. Day 5, again, 0 afternoon fatigue plus energy, wondering, what the fuck, really? See, this is the thing, right? The results for many people are just almost too good to be true. This is the same experience I had. My afternoon fatigue just vanished out of nowhere. I'm like, wait, what the fuck? Why am I not tired in the afternoons anymore? Surely, it's not that AG1, is it? Turns out it was. Day 6 and 7, same thing. Day 8, same thing. Plus, I had the want to get things done around the house that I normally would slack off and not get done. Again, the point, extra energy, you'll need to use it, you'll find ways to use it. Day 9, 10, and 11, and today is day 12. I fucking love it. So however you managed to get me to buy it, I'm so glad you did. Thank you so much, SMR. It really changed me so far. Guys, this shit really works. Just try it. By the way, this is the reason I continue to relentlessly promote AG1. A lot of people get real fucking mad in the comments. Oh my God, Snake Oil Salmon's sold out. Oh my God, he's a scammer. This is fraud. But constantly, I'm pretty sure everyone making these comments is also currently short Tesla stock. I'm not particularly concerned about people having a negative perception, those folks suffering from small brain syndrome, still living in my bum's basement syndrome, etc., writing mean comments, claiming AG1's a scam or it doesn't work. I mean, bro, when I get feedback like this is what keeps me going. And remember, there is a 90-day money-back guarantee. There's nothing to lose here. Just try this stuff for a month, and if you don't get these results, get your money back. See, it's a literal no-brainer. It's an IQ test at this point in time. Testimonial after testimonial after testimonial like this. Get your money back if it doesn't work. Just try it for a month, and if it doesn't work, get your money back. Today's the day. It's finally time. Be like this guy who was a massive skeptic, but finally, after 1,000 promotions in a row, caved in, tried AG1, and has results like this. Head to drinkag1.com/SMR or click the link at the pinned comment, and please, let me know how you're feeling in a few weeks' time. Now, if you'll excuse me, time to put my extra energy to good use. I'll be recording some more exclusive content for Patreon and my Twitter subscribers. So click the links in the pinned comment. See you over on Twitter and or Patreon. And don't forget to grab your AG1. Love ya.